the manipulation stage. Like when we want to see price trade higher, generally we want to see sell side taken first. Looking for long. Only going to look for long. Look at that. And right, what's the time? 8:44. I couldn't trade like this, I would say 6 months ago. Okay, hey guys, welcome to another trade review. So we are going to review this 24th of July trade. So basically, what I was looking at is London low to be tagged. And we had London low tagged, so right now I'm waiting for the news release. 9:45 and 10 o'clock we have high impact and medium impact news. So you can see me typing right here, accumulating stage now, waiting for time distribution stage because manipulation is already done. So we're just waiting, and right now we are inside the 850 macro. What price do is, since we already taken out the sell side, so price is basically just accumulating longs right now. Yeah, so there goes the opening bell, and just waiting for 9:45 news release. Okay, as you can see that big spike up here, that's the news release. So we traded higher first, and like I said just now, was aiming for the pre-market buy side liquidity, which is the untouched liquidity because we already taken out sell side. So what price did was just poke a little bit, then trade back down, taking out opening range low, and then we even tagged the previous day's first presented failure gap. So very confluential area, okay? So right now I'm just waiting for a sign of a market structure shift to let me know that yeah, right now we are in a buy program because since I'm bullish, I'm only looking to long, and you can see me measures here, and risk is a bit too much to my liking, but I still do it because it's a low risk entry. It's a very good risk to reward entry. So actually it's not too much also, it's just 20 points. So yeah, so as you can see, I entered a low risk region entry, and right now what I measured is this inversion failure gap. I don't want to see the midpoint of it get breached, okay? Means I don't want to see any bodies close below it or any candle open below it. If it does so, it has to run real quick, okay? So right now it's not leaving the failure gap like what I wanted to, so just looking for any supporting discount arrays, and we had seen a trade away from this break down close candle. These two consecutive candle is the order block. So you see very nice spike up, very nice reaction from that, and that is what gave me confidence to hold the trade longer also. And basically what I'm looking at right now is this dash. S dot B stands for silver bullet failure gap. I want to see the consequential encroachment, which is the midpoint keeps the bodies higher than it. So you can see my stop is roll up, and right now we are into just a 14 point stop loss, so that's less than 1%. So at this point, we got nothing to do but we just wait, and we have 10:30 also. So this is basically when we expect the indices to form the low, 9:30 to 10:30, and dollar started trading lower. So right now I want to see it really expand higher. I want to see respread its wings, but we did not have it. So you can see that I'm typing that it's a high resistance run. We have two choices: either we close the trade, or either we manage to stop. And like I said, the only thing I want to see is this silver bullet not fully filled. That's why you can see that I move my stop loss a little bit below the midpoint of it. So if I'm really on point on site, we really want to see it break the range right now and just expand higher. As you can see, there we have it. So right now this is already a balanced price range. That's why I just shift it higher, and it's below the midpoint. It's just nice a few ticks below the midpoint of all this back and forth price action. This is considered as a balanced price range to me. So Just waiting. I want to see this. I want to see this CB act as an inversion failure gap. At this point, this was a 40 points TP for 20 points, so it's a very nice risk to reward. And then we had ES just spiking higher. So at this, I want to see Nasdaq do the same, and Nasdaq did the same, but you can see that it did not even feel my take profit. And even if it failed, okay, it's a $57. It's $23 difference, so it's a 0.5% difference. But I try not to be so fixated on that, okay. And you can see because of this, I decided to okay, and ES looks strong also, so might as well shift my stop loss a bit higher because I decided that maybe I can try to stretch because lowest hanging fruit is already tagged, and you can see me move my take profit higher because well, I pretty much secured enough already. And then we go stop out in the balance. And honestly, later you can see that it's gonna fast forward it. You're gonna see that it did tag my TP, and I trailed my stop loss here actually. So to me, did I strangle the trade? I don't really think so because my stop loss was below this red candle, this outlook candle, and because in a buy program trading with order flow, generally the down close candle will act like support. So that is where I did not want price to breach because we also have inversion failure gaps right here, which can be reclaimed and reclaim BC right here. So that's why, yeah, I don't think I did strangle the trade, but yeah, maybe I did. So because I could have just trailed my stop loss a bit lower than this, because right here we have one PD array, two PD array, three, four, five PD arrays. So actually, it does not really make sense. But yeah, I was a little bit too aggressive because actually, when I move my stop loss right here, I should only move it when we see a break in the high. So I should only move my stop loss up here when this candle high is broken. Means when it's here, I should only move my stop loss higher. Otherwise, it's still within the range of this wick and the down close candle. And down close candle is already used multiple times, so it can just trick back there again. So yeah, it's a very good discovery, a very good lesson to learn, right? It's when I'm trailing my stop loss, when I'm managing my stop loss, I want to manage it in a manner where my trading is aligned with the algorithm. So yeah, basically if I had just moved my stop loss up here, don't trail it, don't trail it so tight because moving it to here is very good, okay? Because it's between a discount and a premium. Price is just stuck between these two PD array, this discount tail midpoint and this discount and this premium weak CE. So basically, price is held inside this range, and price can revisit the range anytime. So that's why I say that next time, okay, it's good to trail the stop loss here, so we do not strangle the trade because all this back and forth price action, it just shows that it might just use it again. And yeah, that's basically one of the realization I have. If I want to stretch, first should not expect it to be as profitable as it is, and it's a zero sum game because I either win $40 or I either win $100. Is a very good win-win position to me actually. So this is something that I'm trying, but I only stretch when we have the right market condition. So yeah, it's kind of a human error, but it's a very good lesson also. Trolling it here because if I had trolled it up here, it's fine because I'm still looking at price to bang around within this gray pool area. So these 2 weeks midpoint is a gray pool area. So if I move my stop loss right here, it's a few ticks below the gray pool area. And that is where we don't want to see price breach. That's why, yeah, viewing this trade right now, I realize this point. So that's why it's so important to journal and review the trades, right? Yeah, so yeah, it was a nice 50 points run. If it had been here, maybe just extra 10 points. But I had, I was thinking like, okay, because this was the last day of trading, because right now we are going to August, and August, January, I won't touch the markets. I was thinking like, I could have bagged, $100. I could have bagged $40 extra, but right now my thinking is, okay, what if I made $60? And what's the difference between 60, 70, 80, 90, $100? Not much difference actually. Well, compared to 60 and $1,000, 60 to 100 is just a $40 difference. And with my account size, it's just 1%. So my thinking right now is very simple. Because like if I made $57, let's say, I just need to make $43 to make it $100, which is fucking easy. Don't have to be. That's why I just told myself that, because I realized I was kind of fixated with the profit numbers. When I lose 40 plus, it's fine. It's within the risk management. But when I win, I realized I was looking at what I could have backed, the unrealized profits. But actually, it does not matter. The difference between $50 and $100 is no difference. The difference is I just need to win another $50, then it will be $100, which is considered a very easy short scout in Nasdaq. But if I win, I'll be contented and I'll just sit on the sidelines. You can see that I did not even trade after that. So yeah, and my draw, the bias, everything was right. TP Talbot was right. The only mistake, no, not the only mistake. The only thing done a bit wrong, a bit not right here, is because when price, like I said, when should I move the stop loss? Okay, just look back. Okay, right now this stop loss trades, this stop loss is a very good, it's very good. Okay, and I was just looking at this STD, standard deviation of the opening range gap, 0.5. I want to see it just trade higher. That's why you can see me throw my stop loss up there also. But right now, what's the problem here? Like I mentioned just now, for me to throw up from here to here, actually I should have thrown lower and here, because right now there is no 3 PD arrays. Notice? Okay, let's just continue playing it. There is no 3 PD arrays. Okay, first this order block, then propulsion block, then this wick. I did not even allow it to use that wick. I did not even allow price to use this wick midpoint. So this whole thing is a grey pool area, and price can bang around the grey pool area. Wow, beautiful, right? Price is so fucking beautiful. Just so beautiful. Yeah, so it's a very good study for me also. I did learn something new through this review. That's why it's always so important to review. That's why you see, it's good to trail to here, because we already break this and this level. So we did break these two grey pool area. We do not want to see the midpoint of the grey pool area traded back. That's why you can see that I said that, okay, right here, it's good to trail to here, because we do not want to see the even upper quadrant of this grey pool area between these two wicks get traded too. But when price was here, inside the grey pool area, I trailed price way down, way up to here, which is likely to just stop me out. So, man, good. Okay, very good. And like I said, yep, there's no difference between $60 and $100. There is no difference at all. All the difference is just one trade away. And if you lose, it's fine. Because right now, I can see in my risk management, at least I can see the end of all the drawdowns. And for this month, congratulations on making, yeah, I made like 3% plus. Yeah, definitely couldn't do it for the past few months. And looking at the way I trade right now is really bonkers, man. Like you see, I even expected the manipulation stage. Like when we want to see price trade higher, generally we want to see sell side taken first. And you can see that I noted out what looking for long. Only going to look for long. Look at that. And right, what is the time? 8:44. Man, I couldn't trade like this. I would say 6 months ago. Maybe if I'm being very generous already, maybe 4 months ago I couldn't trade like this also. But reading price, just looking at price, just gave me this discovery on, oh, so this is how the Judah swing is like, how price used the 8:30 macro trading into the 9:30 opening bell. It just sort of links together. And how session liquidity is used. London liquidity, Asian liquidity. Like during 9:45, what do we expect generally? The London lows to be taken. And did it do it? Yes. It freaking done it in stunning manner. And did we use the the old first presented file yet? Did we use it? Okay. I'm pretty sure you guys did see it, right? We did freaking use it. I think so. Yeah, I see. Prices bang around. Then yeah. And where was I going along at? After it displaced from the first presented fair gap, why? Why did I know that it's going to turn? Because of this. We broke a swing high. And what is that? A bullish market structure shift. Is that not beautiful? And what is untouched? Right here, buy side. What is taken? Sell side. So smart money went long here. And where are they going to trade? Higher here. Because anyone that was safe feeling long, they'll probably trade a stop loss right here. So really, we are just targeting retail idea. But anyways, right now, yeah, I'm very getting very excited talking about price. Anyways, you can see the price tag this high. It sure did, because if it didn't, like if I wasn't looking for those high, why did I even went long? Correct? And look at this other rock. Look at the reaction of it. One tick just below it, and then it just explode higher. Man, so I'm telling you that I'm just very blessed to be able to look at price like that. And it's the August, so I'm just gonna chill and just study. Just gonna watch all my trade reviews back. Just look at all my journal. It's good to recalibrate. So yeah, I'll see you guys in the next one. Yeah, I might seem a bit excited, but honestly, I kind of like studying price right now. I just couldn't really find the time. It's 12 at 12:10. I need to work at 12:45. Yeah, so I'll see you guys in the next one. Okay.